Buying expensive premium-priced properties is a sure way to have all your eggs in one basket. To top it off, losing serious cash flow in the hope to have capital growth is not how it has to be. Join Terry Ryder from Hotspotting and Arjun Paliwal from InvestorKit on an exclusive smart property investment webcast as they share more on how you don't have to buy expensive to buy good. Register now at smartpropertyinvestment.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, how you going? Thanks for joining us on the podcast today. A pleasure as you join us as we navigate this crazy world, which is property investment, and it's ever changing. And we're recording this on a Monday, so auction clearance rates were obviously the headlines on Saturday when they all come out. A little bit down from the week prior, but we don't get carried away with watching those things moving forward. Often it's the benchmark people use to get a litmus test on the state of the market. It's one of many different factors and indicators which shape the way in which property is growing or evolving here in Australia. So tread with caution. Don't base all your decisions on auction clearance results. It's just something to give you a bit of insight on what's going on. There's markets within markets, and often on the Smart Property Investment Show, we sort of fall victim a little bit to just concentrating in Sydney, Brisbane and Melbourne, and I sometimes get a bit of flack around it. We do cover the other markets as often as we can, Tassie, South Australia, Perth, Northern Territory as relevant, but I guess the eastern coast of Sydney is where most of the properties are located and therefore the biggest markets, and you have often the most fluctuations in the market as well. And the chat we have today is going to be a bit Sydney-centric, and again, we're calling from Sydney, so we often lean this way, but focus on a bit of the high-end side of things, and also primarily how you can actually get a bit of advantage as a property investor in this current market at the sort of higher end. You know, we cover a lot of properties, investable locations, which some people would say buyers agents around the sort of lower, sort of mid socioeconomic areas, and they offer a very good proposition for a lot of property investors. But there is a completely different market. That's the top end of town. And in the studio with me today is Amanda Gould. She's from High Spec Properties, buyer's agent of the year, actually, in the Women in Real Estate Awards 2019. So she must know what she's doing. She's won an award. Amanda, how you going? You well?
I'm great, Phil. Thanks.
So there's two sort of sides to the property market. There is more affordable properties, and there's a lot of investors that target on that affordable side of things. And there's also more prestige, higher end properties, which I understand is probably a bit more your leaning. Is that a fair assessment?
Well, we do both, actually.
You do both?
I mean, last week I bought a property for $700,000 and another one for 1.8. So one was for an investor and one was for owner occupier. So we actually look at all ranges.
All ranges. I think 700 also is probably pretty high for a lot.
Yeah, true.
A lot of people
compared to the rest of the country.
If you're buying properties in Brizzy for a couple $100,000, it's probably not your bent. So as a buyer's agent, where do you focus with geographically?
So we look at the inner west, the eastern suburbs, the North Shore, the northern beaches, and we've started looking at more south also. So we've got clients looking at south to move to get a little bit more bang for their buck.
Okay. And apartments and houses?
Apartments and houses.
Okay. Owner occupied and investment?
Both.
Okay. And so what sort of split would you be doing, sort of owner occupied?
Look, when I
investment?
first started the company nearly 9 years ago, we were looking at about 50-50. Okay. And now I'd say, well, after APRA, it's changed a bit, but during that time where they did tighten up lending, we found it was probably about 80% owner-occupier and 20% investor. Okay. Now we've seen the swing come back. We're probably about 60-40. Investor
to owner-occupier?
Yeah.
Okay. What sort of people are buying investment properties at the moment? Everyone?
Look, everyone. We just signed a new client that's overseas and he's buying his second investment property. People that have got some money that they've built up equity over time in their homes, and first-home buyers that are buying to rent-vest.
And do you find that because of, the price point that you operate within, which is purely a product of where you're buying properties, eastern suburbs, northern suburbs, etc., like the price point is considerable. I think it's a little bit under $1 million is the average price of a property in Sydney right now. So irrespective of your investor or an owner occupier, you're paying big bucks for property here. So that's your natural client base. Are these typically therefore, high earning income type individuals who have sort of professional jobs or jobs that generate big incomes, or they've already got large portfolios? Is that normally the type of client you have?
Yeah, usually people that have got, steady incomes. We've got first home buyers that start buying around that $600,000 with us, but they've usually got pretty good jobs, or their parents are helping them out with the deposit.
And I guess where you're buying properties, there is quite a large rental market there as well, whether it's sort of new build or recently built stuff all the way through to more established dwellings. I've lived in the areas where you are buying properties for investors, and a lot of it can look the same. And I've been through, as a renter myself, sort of looking for places to stay in, or as a property investor, trying to find a particular asset which is going to be a point of difference to something else in the market, whether that's more rentable or whether it's more gives me a high capital growth. So a lot of people get carried away with transforming properties, and renovations has been a very strategic and popular strategy for a lot of people to amplify their investments, whether to get a better tenant in or keep them longer, and or boost the capital value of a property with view to either flip it or to just draw down the equity. So it is a good strategy. I think people have struggled a little bit over the last couple of years. Some of it's the financing market, some of it's just the appetite for buying and selling. I know a lot of the properties I've got in my portfolio, or Smart Property's got a good portfolio, we did a heap of renos back in 2012, 2013 when everyone was doing renos, and that's how you could really get that capital gains boost. But not as popular recently. Is it sort of evolving? Is reno market coming back? How do you see it?
At the moment, it's a little bit flat compared to what it was. So I started buying, my investor journey started in 1988. I bought a studio in Manly when I was 18, back when the interest rate was like 18.74%. So a bit different to now.
Crazy.
I know. And back then, nobody was renovating that I knew. I just bought something ugly and I wanted to make it pretty. I didn't really have any strategy or structure around what I was doing. I just knew that was really ugly carpet and the paint was horrible. And I just did a really basic renovation for rental. From there, my journey was to start renovating properties for profit in the 90s, and I renovated and flipped, and then I renovated and kept some in my portfolio for long-term strategy. Now, back then, again, not a lot of people were doing it. Then they started teaching people, and of course, shows like The Block made people feel a lot more confident than they probably were. And we did have a really good number of years, probably 10 years, where that went really well and you could actually renovate. And even if it wasn't a great renovation, people didn't really have the education around what was a good renovation and what wasn't. So they were still making money, especially the last few years. But now people are a lot more discerning. They've seen renovated properties. They understand people are flipping for a profit. If they're going to be paying for that, they want to see something a little bit more bespoke or something a little bit more interesting. So I think people fall in the pitfalls of people renovating and thinking, wow, I'll put in a new kitchen, going to IKEA or Bunnings, making it pretty generic with a splashback, etc., and thinking that they're going to make 50 grand to 100 grand on one renovation. I think those days are long gone unless you actually really know your target market.
So when we come back, we're actually going to understand how you can work out whether or not you should be renovating a property and how you can get the most effective result out of it. Back in a moment.
Do you want to capitalise on the projected growth opportunities in Brisbane? Streamline Property Buyers are your local area experts with a qualified property investment advisor, licensed builder and rent specialist, making them the most qualified buyers agents in Brisbane. This team know Brisbane property better than anyone else. Find out more at streamlineproperty.com.au.
Welcome back, everyone, to the Smart Property Investment Show. I'm here with Amanda Gould from High Spec Properties. We're talking renovations and how to get it right, and I want to get into how to get it wrong as well, because I'm sure a lot of people are doing it. Maybe that's a good way to kick off, Amanda. You said there was like a heyday of a decade, I think, when pretty much anyone can get a reno right as long as you didn't overcapitalise too much, driven, I think, from the empowerment people felt from shows like The Block and some of the education going around it. It's been a lot harder lately. What's the worst reno stories you've heard, and where have people really got it wrong where you should be avoiding?
Look, I think the thing that people get wrong is really not working out what their target market is, and knowing if you're in a certain area, some family areas work better than if you're looking in, for example, Potts Point or Darlinghurst. You've got to have a little bit more like bespoke interest. It's got to be something that people are going to remember. So I think the biggest mistake is not knowing that market and who you're actually targeting. So know the area that you're renovating and what sells well. Look at the research property and see what's been selling quickly and well. And even go to high-end places and see if you can replicate that a little cheaper for the renovation that you're doing. You don't need to spend a fortune on a renovation to get it right. You just need to have it a little bit more bespoke and a little bit more interesting than a generic Caesar stone, glass splashback, which I can't believe people are still doing, but I see it more often than not. So it's, I've been to $4.5 million properties where they've just used a very basic splashback or very basic hardware that really doesn't excite you. But, it's the view that's got it over the line with the price or whatever.
So you need to understand the market. When you go into, as a property investor, a renovation, do you need to be going in there on the basis of saying, I am doing this to sell versus I'm doing this in order to amplify my portfolio, try and add some value and get a better tenant in? Can you go in doing both, or you got to go in one or the other?
I think you need to look at both. because you never know what circumstance you're going to be in the end. Look, rental, if you're buying to rent, of course, it doesn't need to hit every single, spot. Like the tap doesn't need to be a really expensive, beautiful brush metal tap, or, for a renter, it's not too bad. But renters can go through a number of properties on a Saturday, and unless it's something that stands out, they're not going to remember that property. So they don't, put in an application. So something that does have a little bit more interest will either sell better or rent better automatically.
And you need to know also, if you're, buying property areas that you buy, I imagine the average rent's pretty high, which attracts a particular type of person.
Yep.
So if you're playing in that space and you're buying to rent a property out for a market which has a much bigger appetite for the financial consequences of that, how do you know what they want? Is it about fixtures and fittings? Is that where you got to focus it, or is it about making it most livable property possible, or trying to get more rooms into it, or making it more open space? How do you work that out?
I think it's just, again, it's about the research and making sure that you've got a lot of storage. It doesn't matter if it's a 1-bedroom apartment or a 3-bedroom apartment or a house. People want storage. So making sure you've ticked that box, making sure you've got a dishwasher in there, things that are really, that people want, and a washing machine. I've seen really tiny apartments, studio apartments in Potts Point that have still been able to squeeze in, a washing machine in the bathroom. Really important to do that. And take out the bath. No one needs that anymore. Don't waste the space with a bath. Yes, it's more expensive to renovate a bathroom. 20 to 25 grand would be pretty average for a bathroom. But take it out and make it seem like a much bigger space. That's what I always recommend to my clients, unless it's a house.
And do you think you need to go into it, and I imagine a brief comes from your client, do you actually need to go and identify properties? So if I come in and say, I want something that I can add value to, I'm actually looking for a renovator versus I just want something which is a finished product. Do you think as a buyer, as an investor, you need to choose one over the other, or is it just a let's see what happens type of thing?
No, I don't think you need to. I think it's good to know if they've got the appetite to do that. And of course, having 30 years of buying experience and renovating experience, I've got a team of people, even people that will come in and manage the whole project for you if you don't understand that. So I've got a client we just settled on Friday from McMahon's Point, renovated kitchen, not renovated bathroom, and I think they can make an area which was a study into a 3rd bedroom. So I've said that's going to capitalise. It's going to bring you from a 3.8% yield up to about a 4.2% yield once that's done. So helping them through that and giving them the team to manage that. But we also looked at renovated and unrenovated properties for them in their journey with us.
And, a sort of mindset shift for some people when you're going into something like this, should you just be completely open-minded and lean on your advisor, your buyer's agent to actually help steer you through this? Because I know a lot of people get stuck in their ways and are unable to sort of deviate from their sort of chosen strategy.
Yeah, absolutely. I think you need to be open. I mean, some properties might work because the building's amazing. I mean, we tend to buy in boutique blocks, not larger blocks, just because when you're going to rent, there's not as many people up that you're going to be competing against. And also if you do sell, the same thing. But I just think you need to be open, a little bit more open-minded than saying this is the only strategy, because I've had clients that say this is the only strategy and they only want to buy in Mossman, but we've ended up buying them in Wollstonecraft because it worked out better. So you do need to have a bit of a shift, and we like to take clients out of their comfort zone anyway. We say, we know that you didn't want to renovate, however, this is a fantastic building with a great yield and you've got potential to actually earn this once it's renovated. So.
And how do you balance working with your clients, saying buying one property in Mossman or Wollstonecraft versus buying 2 or 3 properties up in, say, Brisbane? So, a $700-800 property, $1,000 property versus $300,000 properties. How can you balance those things out?
I think we just work out the strategy for them to begin with, because as you know, we're working with suburbanite, and so we can actually offer that nationally, but we don't give that advice. That's their patch. They're the national buyers agents. We're the Sydney buyers agents. So we'd actually sit down with them and work out the strategy for them and what they're trying to achieve. Clearly, at the moment, we don't have growth in Sydney, but if they're wanting something that they're going to chase growth over the next few years, then we would be recommending to them buy outside of Sydney. If they're wanting to buy in Sydney and wait for that growth to come back but chase the yield, the average yield we're getting at the moment is between 4 and 4.6%. And that's, I think that's pretty good for Sydney. We haven't seen those numbers for a long time.
And what sort of types of properties and locations are giving you the best yields at the moment?
Eastern suburbs by far. Okay. I mean, as you know, we buy pretty much all over Sydney, but eastern suburbs has given us the best yields. And look, a lot of, when you actually speak with agents and you'll say, I really want a high yielding property, a lot of them don't actually understand how to do those numbers. So we'll just say, well, what's the rent and what's the expected price? And then we'll work out the yield for them. We always err on the side of caution because, as you know, the market for rentals is a little down at the moment, so they're not achieving what they were. But it's just really knowing, where to buy, and eastern suburbs anywhere, Surrey Hills, Darlinghurst, Potts Point, Bondi, Tamarama. I've got a great one. We converted a 2-bedroom and study into a 3-bedroom, and we've achieved, once they've finished that renovation, it'll achieve about 4.6%.
Okay. And what sort of balance are your clients buying and flipping versus buying and holding and renting?
More buying and holding than buying and flipping.
Okay. And that's just the nature of the market today, right?
That's the nature of the market. And really a lot of people and I work closely with the School of Renovating. I go in there and talk about the benefits of a buyer's agent and how we know how to add value through renovation. Not all properties can be flipped because the profit's not there. So you've got to really know what you're buying. But at the moment, they have to have a second strategy. So whether that's putting it on Airbnb until the market starts picking up, they've got to be able to hold that asset in their portfolio until the market picks back up and they achieve the best price. So I recently had a client buy something. We bought them a great price in Darlinghurst, but the renovation was very vanilla and they haven't achieved the price that they wanted to achieve. And, I know the market's come back since we bought it and they've renovated it. And by the time you get it through, the strata and get the bylaw put in for the renovations, etc., that can take some time. So they might not be flipping it for 6 months. Instead of the old days when I was doing it, I could flip a property in like 3 or 4 weeks. Now it's, 6 months to a year. Sometimes people have to hold on to it. Plus, of course, the reduction in capital gains tax. But we're finding unless they've got something that's really going to evoke emotion in the buyer, that they're not achieving the results that they want.
And when you think of the city market right now, and the same applies also in Melbourne in some of the areas of it, would you be rushing into getting into the city market right now for the basis of chasing yield, or is there a rush, or do you think it's you've got time on your side? I
think you've got time on your side. I don't think we're going to see a huge increase. I mean, the rents are still down, so I think you've got to really know where to buy. But if your long-term strategy is to buy in Sydney, why not buy while the market's down? Don't wait for it to creep back up in a year or 2 years. Let's buy now.
And you need to actually understand what assets are going to be best suit your portfolio or
Absolutely.
your strategy. And location-wise, you're saying eastern suburbs doing well, and a lot of that's driven, I guess, by renters who, want lifestyle benefits and stuff. And it's been like that for a long time. It's always been a very popular place to live, particularly with young folks. But what would you say the 2 or 3 key things are to get right if you're buying in the city market right now and in areas that you are for the basis of chasing yield?
I think having a smaller block, having something that's really well kept, because you can have a beautiful renovated apartment inside, but the outside of the block isn't very well kept. Just bought something that Art Deco. People love living in Art Deco because of the high ceilings. It always feels a lot bigger. Boutique block, you're well kept, great location, of course, if you can transport really close. For example, I'm not keen on buying properties that, normally that don't have car spots unless it's in somewhere like Potts Point that's already got a train station and, it's easy access, or Surrey Hills, you can walk into the city. So location's important. And I would trade off having that car space that's worth 100 to 150,000 because the yields will increase. Because if you spend that 150,000, you may not get, that extra money back in a per week rent just to have that car space. So it's actually, the yield does go down, so you've got to really weigh that up. And
looking at the hierarchy of what makes a property attractive, whether it's to buy and hold and rent out or buy and flip, are views like the number one? If you're buying in areas where you're buying, where it's quite a lot of water around, does views trump anything else, like views over transport, views over car space, views over not a well-kept building, views over something which is a bit old and dated? How would you frame that?
That's a good question, Phil. I would say, look, views, you're not going to get the yield as an investor. So I can give you a fantastic yield. I went and saw something on Elizabeth Bay Road on the weekend that I would like my investor to buy, but the yield was like 3.6%. So it's nowhere near the fours that we've been getting for other clients. But it has a view, so it will rent quicker, but that actually has a car spot because it's in a bit of a different price bracket. But I would say if you can afford a view, then get it. And, as long as you can afford to keep it, then I would do that.
Comes down to cash flow.
Yeah, absolutely.
And that's the key thing. It should be part of your strategy, whether or not you've got capacity to service a negative portfolio.
And it's going to grow over time because it's got a view. And as long as it's not going to be built out and you've done your price research and you've done your due diligence that it won't be built out and you're right on the water, or you've got a great view that with an old building in front of it, just do your due diligence to make sure that there's no, new block going up that's got 20 stories high and you're going to miss half your view. So
buying in areas that you buy, you've got some more established dwellings and Art Deco.
Yes.
It's very popular in those sort of eastern suburbs areas, even around sort of inner city. When you look at these type of buildings, they often come with a little legacy.
Yes.
Problems, issues, whether it's with strata or whether it's the building yourself. When you're looking at buying a particular property in an older building, how do you uncover really what the situation is with the strata or issues with the sort of tenant committee any given time? Because a lot of times you don't really know these issues until you move in and work out that there's fist fights in the front steps or there's no money in the sinking fund.
Well, that should all be in a strata report. And we actually have strata specialists. We read through a strata report and, of course, we'll know whether it looks like a good building or not. But if there's any issues, we would get a professional person that actually just reads strata reports, that's all they do, to give us their professional opinion so we don't move forward on the wrong thing. I mean, look, that client we bought in Potts Point last week, we actually looked at something in Darlinghurst, awesome building. It was actually a better apartment, I think, in the end, but there was issues with one of the owners downstairs that was suing the body corporate, and they were suing them for $60,000. And I said, that's what they've got in the kitty. I mean, there's only 10 apartments in the block, but I just don't think it's worth, how long's a piece of string? You just don't know what's going to happen in the future. And I did a bit of due diligence around that from other agents in the area, and she's been having ongoing problems in there, even though she's an owner, not a tenant. So
the biggest issue with that, I think a lot of owners, when they end up in these bun fights with strata or with their other neighbours, that it actually devalues everyone's
Absolutely.
property. I don't think people really understand that.
Absolutely. And it did go for less than, we didn't buy it, of course, but somebody else bought it. But I would have thought it would have got at least $30,000 more. And I'm sure that they've taken that into account. If we're going to buy it, then let's have some money back in our pocket just in case litigation does go further and they do have to come, cough up with a special levy.
Yeah. And it's also, with, managing your strata is real sort of art form. If you're doing renovations, everyone's instant response is normally, it's going to be too noisy. I don't want anyone doing renos in the block. But what it does, it helps increase the value of properties in a block, and therefore it sets a new standard for the blocks. And essentially everyone's property goes up in value as a result of it, right? And a lot of people don't understand this. So what would you say, very short-sighted, what would you say the 2 or 3 things that you need to get right in managing strata if you buy a property to renovate? How do you make sure that you remove all the roadblocks that potentially be there and keep everyone sweet? Any particular tips?
Yeah, there's a number of tips. So, of course, make sure you find out what the renovation rules are. I do that before we actually buy. So I find out from strata what the rules are. Do you have to wait for the AGM, or will they have a special committee to approve? If they're putting in floorboards, which 9 times out of 10 when you're renovating you do, what the soundproofing is. I'll always go above what they recommend to get it through. Make sure you put the bylaw in. Like in the old days, you didn't need to put bylaws in for renovations, but I've got a client, the one that I was mentioning in Marnes Point, and they're having to put one in even though they're just doing a bathroom and putting in one door because they're changing the waterproofing, so it has to go in. Now, not all strata and committees are that need that, but some will. Of course, if you're taking out walls and you're changing configurations, you would definitely need a bylaw, but that's an extra expense that people don't think, and they charge a lot more than a normal conveyancer or a solicitor.
Is it always hard renovating in an apartment block? I don't know anyone has ever had a good experience doing it.
I think you can get it down to a fine tea. I remember I bought a property the day before I gave birth, and it was my only child, and I thought, how hard can this be, having a baby? Not how hard can it be renovating, because I've been doing it ages. And it was a 4-floor walk up in Darlinghurst. I ended up not flipping it, keeping it in my portfolio because I loved it afterwards and I didn't want to let it go. But I renovated that with a baby strapped to me that was brand new and chose all the tiles and did all that. And yes, there's always setbacks, Tyler's trying to get away with murder, especially when you're a girl, I got to say. They try to get away with it even though I've been doing this for years. They don't do the right thing, and then you've got to, completely be on that. As long as you're always onto it and you go and check the work every single day. But it's dealing with the neighbours too and just getting them on side. If you're living there, it's a lot easier to do that because you'll see people in the corridors and stuff, and you can start suggesting and recommending. I always tell my clients to get on the executive committee if you can, because it will help you get the renovations through. Yeah. That's what I've always done. But I think it's just managing expectations and knowing that there's going to be roadblocks. Like there's no renovation. It doesn't matter if I've had clients with $600,000 and $6 million and they've come up against roadblocks. It's going to happen. It's just a matter of how you manage them and make sure you've got the right advice moving forward.
Any top tip for managing tradies other than making sure they're not taking advantage of you by keeping the prices?
Get good tradies.
How do you find them?
Look, trial and error. Come to me. I'll give you my, I'll give you my little black book. If you're one of my clients, you get all of that free of charge. I've already gone through the hard yards. So, I've had some pretty bad tradies in the past. Obviously, we don't use them anymore, but I've got a really select group. So I'll have like 4 of my top tilers, 4 of my top plumbers, electricians that I know I can trust that will clean up after themselves. They are out there. You just need to do your due diligence. Don't just go for the cheapest because you're trying to save money. Go for somebody that's got references that you can ring and you can make sure, because there's a lot of dodgy tradies out there.
What's the biggest red flag when you started working with a tradie when you go, this ain't going to work out?
Timelines, if they tell you one thing and then don't do another. If they're not neat, I had people go in and put built-ins. It's not really a big thing to put built-ins in. 2 built-ins I had in a property I was flipping in Bondi Junction. And there were cigarette butts on the floor. There was used coffee cups thrown around. They just was so dirty. And they were quite a big company. And I was really surprised, and I complained to management and they were shocked. But, they should know what's happening with their trades. There should be photos. Like I've got one plumber. He takes a photo before and after exactly what's happened and sends it to me. Same with the cleaner that I use after renovations. She shows me photos before and after and sends them to me so that I can really keep on track of what's going on.
So we've been chatting about purchasing property for the view of potentially flipping it, but it's all about also for some people, how do you get the best tenant in there? When we come back from this break, we'll chat about that. Back in a moment.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit dash.com.au/SPI.
Welcome back, everyone, here with Amanda Gould from High Spec Properties. We're chatting renos. We've been chatting about how you can get the best tradies, how you can make sure that you're finding the right asset for your particular needs. And one of those strategies might be to buy, renovate and hold as a rental property, but you've got to be able to stand out without sort of overspending and blowing out the budget. What do tenants like to see? What do you got to spend your money on to make sure that, to one of your early points, that your property is memorable out of the 20 that might visit any given day?
Yeah, that's a good question. A big thing, obviously, kitchens and bathrooms sell homes, and also for renters too. They want to know that if they're entertainers, that they'll have a nice place that they can cook in. You've got a nice balcony. I think with renovating, make sure the splashback is really interesting. Like I usually like a tile that has texture, because people will go in and touch that automatically, and you can see that's already evoking emotion whether they buy that property or not, but they will remember it. Hardware, don't just use shiny chrome. It's out. Use something like a brush metal, and you actually can get a really good range in Bunnings now, so you don't need to spend a fortune. I've got people that have, used $1,000 taps. Renters don't know the difference, but you can actually get that for probably about $200 or $250 in Bunnings, and they do all the brush metals now. So you've got like the brush brass, you've got the brush rose gold, you've got the brush chrome, instead of just being that shiny chrome, which most people put in their units. Make the splashback more interesting. Of course, stone benches, great. You don't need to spend a fortune on them either. If you're doing a kitchen, just go to IKEA and Bunnings. Really, they do good kitchens now. They've got all the soft close, all that mechanism. Spend the money on the hardware and, the taps and the fixtures and fittings and the nice tiling.
Gas over electricity, does it matter?
Look, a lot of my buyers that are buying to live in want gas. Renters, look, I don't think they're going to not rent something because it didn't have gas. And a lot of the time you can't put them in the old buildings that don't have them. So I don't think that's such a big deal. And you don't need to spend a fortune on ovens, etc. It just needs to be a name brand that people know, not some generic brand from Audi, you know.
Okay. And air conditioning?
Of course.
Mandatory,
Sydney,
do you think?
I reckon it's mandatory. I can't believe that people don't have it. And I've been into homes that are, in the millions and they don't have aircon. And I'm like, wow, I'd put it in. Renters will go for something that's got aircon over something that has a bit better, splashback.
Yeah, and dishwasher, renters want dishwashers?
Absolutely, dishwasher, absolutely. Yeah. They want to be able to wash their dishes quickly. They also want to be able to wash their clothes in their apartment.
So
if you can squeeze it in.
Internal laundry.
Internal laundry, just put it in the kitchen, put it in the bathroom, wherever you can squeeze it in. Take out that bathtub and put in a shower so you can actually have, a laundry in there.
They always say that bathtubs are pretty important to attract families, so no, yes.
Not for the places we're buying. Look, for a house, absolutely. For maybe a 3-bedroom apartment, I would agree.
Yeah.
For a 2-bedroom apartment in the eastern suburbs, North Shore, not so much.
And what about 2 bathrooms, or at least somewhere where if you're an entertainer, is that really tenants don't really care too much about that sort of stuff?
For my renovators, I bought something on Bondi Road with amazing views in an older building that having work at the moment. I said, look, I think you should change that laundry into a second bathroom. So yes, if you can do that and there's already plumbing there, you're not having to chase it through a wall, then that would be ideal. Again, you'll need a bylaw and you'll need to get approval, but definitely worthwhile if you can add in a second bathroom.
Actually, and do you have a metric that you use for working out how much to spend on a renovation, or is it just, how do you work up a budget?
Yeah, I do. It's actually something that we work on with the clients ourselves, but we use a percentage model. So we'll work out if they're flipping, then it would be a percentage that we work with the School of Renovating, which is their formula. So I won't let that out on air. But I would always work out if they're going to be buying and holding it, we'll just work out what the average is. And I'd say I wouldn't spend over this only because like 50 grand should do a 2-bedroom apartment, 50 to 70 grand should do a 2-bedroom apartment, bathroom, kitchen, not going crazy with high-end fixtures and fittings, but nice enough. 50 to 70 should get you a, well-renovated property. Once you're spending over 100,000, you're going for a specific buyer and you may be overcapitalising unless you're holding on to it for a long term.
And to actually make that step between just doing cosmetic and changing floor plates, how do you work out whether to do that or not?
That's, again, it's just advice. It'd be something that I would sit down with the client and say, look, I've told clients to change dining rooms into a 3rd bedroom because, again, the yield's going to come up and it's a big floor plan. It might be 100 square metres. Nobody uses dining rooms anymore. So you can usually integrate those into the living room. So it's just really about advice and making sure you're getting the right advice because, not everybody's a renovator. So they can't go in and say that's 50 grand, that's 100 grand, that's 150, or if it's a house, that's 250 to 500 to go up a floor. You need to have somebody that knows their stuff.
And a lot of people say, I don't want to buy properties that need renovating because I'm really crap at renovating and I'm not handy. Does that matter?
No. And that's the first thing I say. I say, look, this is what I've done for a long time. If that's not what you want to do, that's fine. But believe me, I've got a team of tradies. I've also got somebody that can come in and project manage the whole thing for you. And they're separate to us. We'll have a meeting with them. We'll say this is what we're trying to achieve. And they'll give them a quote. And yes, they'll charge a fee for it. But it'll be a fee to deal with all the trades and all they have to do is choose tiles, a lot easier than having to do it yourself.
And for people who are a bit handy and they like getting their hands dirty, how do you sort of make that decision to say, don't touch it, just get a project manager in and use your time on the weekends to go do whatever?
It's really individual.
Yeah.
Some clients will say that they're really handy, but then they'll have that'll take 6 months to do a basic reno that should have taken 4 weeks.
Yeah.
So it's really about time management and say, look, do you want to get somebody in there renting it straight away, or would you rather have a project to do over the next 6 months and have that vacant? I know what I'd rather, money in my bank.
That's the idea, right?
Yeah.
Property investors. Thanks, Amanda. Enjoy the chat.
Pleasure.
They're really good. Any
Phil.
parting words for budding property investors out there who are looking to reno?
Oh, look, I think you can do it. As long as you choose wisely and you've got some good advice, give it a go. Might be one of the best things you've ever done.
Maybe. Give it a go. That's what I reckon. So,
Yep.
No, thanks for coming in. I do appreciate it.
Thanks, Phil.
Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's happening in property and property investment right across Australia, smartpropertyinvestment.com.au/subscribe. Or if you're a social media person, just go and check us out, Smart Property HQ. I'm getting a lot of feedback from people saying how they can help us on the Smart Property Investment Show. There is one way you can do it, which we really do appreciate. And please keep those 5-star reviews coming and leave some words as well. The guys and girls get a real kick out of reading the feedback we get. And it also helps us shape the way in which we approach the podcast moving forward. So please give us your feedback. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
If If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.